So this video is gonna be a continuation of the the video I just made right now. But I'm gonna probably post this one first. So this video, I'm gonna post it first before the actual video I just recorded now. I just wanna show you my MT5 day. So as you can see, guys, the things I was talking about in the previous video, I applied them. Obviously, I didn't trade the turtle soup there. I wasn't awake at 2 o'clock when it traded to PDR raise formed after the high of the day was formed. We can see Euro finding some resistance at the fair value gap there. If I'm just calculate the 50%, you can even see the critical encouragement, how it is used specifically to find resistance. Look at the body staying below, and look at this, the high of the candle being formed at the 75. Even the previous candle trades to the 75 there, and then drops. If you fair value gap here, look how price trades to it they're using this week, and then it starts pricing lower prices. Obviously now I'm looking at this discount week consequent encouragement. You can see how it traded to it there. I want to see if they close below this. If they close below this on any candle less than the 5 minute, they will push it lower. So they'll continue pushing it lower, guys. Asian low. So in today's example, the Asian low, I tried to briefly share with you the Asian session, how I think about the Asian session in the previous video. But I want you to actually go watch that, because in that video I shared a lot of stuff, to be honest. It's 30 minutes long, but I shared a lot of stuff. Look at this. These are equal lows. These are equal lows. Wow. Wow. It's so much of not a coincidence that they didn't take out any liquidity during the Asian session. They just came here and formed the low. But look at the bodies. They formed the low way above, way below the bodies. Failed to take out liquidity here, but these are relatively quite lows. Oh. On a normal day, guys, all things even, on a normal day, the Asian low there, if we're bearish and then you see price trading above the Asian high, you can sell. In the previous video I told you can sell that. And then once price breaks below the Asian low, on a normal day, once it comes back to the Asian low, you can sell that, and then it will do real dynamic break and retest that you were taught in retail perfectly. But in today's example, it goes up to go fill this fair value gap, and I think the reason it does that is because this liquidity, this Asian liquidity, what I'm basically trying to say, this is my thinking. To be honest, I didn't learn this from ICT. The reason they didn't break and retest this low perfectly is because it was relatively equal lows. So it was not one low that was formed in the Asian session. It was just relatively equal lows. So there was a lot of sell-side liquidity there. That's why they had to like pierce through that and then pierce through it again. You know, obviously trading to the fair value gap there and the order block. So that's very interesting, to be honest, for me. It's very interesting that. It's very interesting. I don't talk a lot about Forex silver bullets, so I'm gonna talk about them, especially the London ones. So every day between 3 o'clock and 5 o'clock in the London session, you have a silver bullet. When I open the 1 minute time frame, yeah, I know I just spoke that so fast that you forgot to take your notes. Take your notes, my boy. You're gonna regret it. Every day between 3 o'clock and 5 o'clock, there is silver bullets in the Forex market. Every day between 3 o'clock and 5 o'clock. in the London field zone, there's silver bullets. So if you don't know what silver bullets are, I made a video on them. Or if you so the silver bullet, guys, is not necessarily a fair value gap formed after the roadblock, ne? So on other days you'll see after the roadblock, price trading to a fair value gap which it left prior to that. So we have a fair value gap here, formed by the 250 candle and the roadblock candle. What time is it trading to it? 4:05. So it's not random. That happens every day. Every single day it happens. Price trades to a fair value gap between. Well, it's not one fair value gap, multiple fair value gaps, but it's between 3 o'clock and 5 o'clock. Look at this one here, 5:10, 10 minutes late. But that's not a silver bullet. It's just trading to a fair value gap. Lower gap opening lower. So when you see a price opening with a gap lower. Oh, remember I told you they'll trade below. Once they close below the critical encouragement, they'll melt it. So you can see after closing below this critical encouragement, they open with a gap. That's not random. So you can see how these things are. You can see how you can anticipate gaps. It's not random. So when they trade back to that, they already did, but you can buy. They already did. In this case, they formed the high there. You can sell that as they form the high. Or you can even wait. Like, let's say it opens. It opens, there's no high, obviously, when it opens. And then it goes down. When it goes up, that's when you sell. It's melting now, yo. So that's why I read that. I'm glad it's melting so hard because I really want you to watch the previous video that I made. It's gonna come after this video, so I'm gonna upload it after this video. So let me just share with you the last few bits of information. The last bit of information. So if a potential high of the day is created before 2 a.m., this is the one I told you about. That on a normal day, that Asian low day, you will see it being broken and then retested perfectly there, and then boom again. But on this day, it had to go back to this fair value gap, which was a silver bullet fair value gap anyway. So yeah. If a potential high of the day is created before 2 a.m., at 2 a.m. you want to trade the PD arrays left after the potential high of the day was created. In this example, you see the fair value gap and order block being traded to after 2 a.m. I'm tired of talking, guys. Lower gap opening again. It's really bearish. And you know what makes it bearish? I spoke about this in the first video. What makes it bearish is DXY, the fact that we went through DXY, the fact that we went through Euro. That's what makes it bearish, So it's that simple, it's that easy, guys. As long as you're just using logic. So thank you for watching, guys. Please like and subscribe if you found this insightful. Click the subscribe button.